Hello, everyone, and thank you very much for tuning in today for this update on the activities of the ERCC Operations Group, a very important part of our ERCC work. I'm Alex Westphal, I'm the Secretary to the ERCC, and I'm joined today by Nick Hamilton. There's clearly no one better to speak to about the ERCC Ops than Nick, who's been co-chairing this group for many years. Nick, thanks for making time today. Nick, do you want to start by briefly introducing yourself and then also say a few words about the ERCC Ops Group in general?
Thanks, Alex, and hello to you all. So to introduce myself, I'm a lead at JP Morgan Markets Operations Strategic Change Team. And in addition to the work here with the ERC operations, I'm also closely engaged at committee level in European infrastructure and with SWIFT and a number of other post-trade associations for securities. The work with the ERCC Operations Group as a standing group supporting the Trading Committee has been evolving in recent years. The group's activities span four key pillars of work for the repo and collateral community. These are, firstly, the regulatory changes impactful to the financing community, including CSDR and SFTR. Secondly, the steering and engagement on market infrastructure change in Europe with particular focus on the ECB and ICSD market activities. Thirdly, the fintech and automation pillar, which includes significant contributions on the evolving common domain model and growing industry reference point for collateral in our fintech directory. And finally, the establishment and maintenance of market practices for post-trade procedures through what has become a Bible for operations in the Repo Guide to Best Practice authored by Richard Camotto, who also supports training and development of professionals in the repo market.
Thanks, Nick, for that quick overview. Many of these topics also feature elsewhere on the agenda of this general meeting, but I think it would be really useful if we could focus this update on the second of those pillars and speak a bit about our work on market infrastructure and in particular our involvement in the different ECB advisory groups in that area. And again, Nick, you're certainly very well placed, being the ERCC representative on the ECB's AMI-SECO group. So let's start with one issue that has caused quite a lot of discussion over the past year, namely the resilience of the T2S platform, following a number of incidents that we've seen last year. So can you give us an update on those discussions and any resulting actions, changes, please?
Yes, thanks, Alex. Resiliency in stress markets is critical, and here in Europe there have been several material disruptions which have subsequently enabled a review being undertaken in Q4 2020, further to these three outages which occurred in T2 and T2S. The focus was to determine root cause and remedial steps to future-proof the system. Deloitte were nominated as the team to conduct this, and there was a strong collaboration with the ECB and market participants as this has matured. Deloitte noted specifically, target services today have evolved considerably from their time the structures and governance were set up. New products, new groups of users, added processes and technologies result in additional requirements and challenges that need to be adequately addressed. Improvements based on their recommendations are necessary and should be addressed urgently. Target services should be proactive about these developments and aim for meaningful improvements. So a number of areas were identified here for action, in particular the planning and preparation for the initial analysis of root causes of the incidents, and also very specific deep dives for the as-is processes and design and implementation, as well as operating effectiveness. So the outcomes here have provided a whole raft of recommendations through 5 key work streams, focused on change and release management, business continuity, failover and recovery tests, communication protocols and governance. And more recently, there's been an additional stream added on the data center and IT operations management. I mean, it's good to say that that the ECB have really taken the consultation as a priority, as one would expect, and assured the market that appropriate resources have been and will be allocated to this exercise. And to date, the communication escalation issues have been improved with additional updates and reporting available now intraday. And of note, more recently, a proposal has been made to set up a critical users group to convene on priority issues to address contingent arrangement and liquidity issues to system users, and in particular, the treasury and liquidity functions. So there's much work to be done here, and the collaboration of the market is key to success. And we're staying very close to this agenda on an ongoing basis.
Thanks, Nick. One topic that we as ERCC Ops, you, but also a number of other members, in fact, have been particularly involved with over the past years has been the ECB's collateral management harmonization agenda and the detailed work that was undertaken by the CMH task force. All, of course, in the context of the development of the Eurosystem collateral management system, the ECMS. So can you perhaps try to explain as briefly as possible, and I know that's quite challenging given the detail of the work, what this is about, why it is important to members, and also where we are with the work?
Great, thanks, Alex. I'll do my best to praise the outcomes here. So the European collateral management system will create a single collateral platform for European central banks in Q4 2023, and the technical build is well underway for testing next year. Corporate treasuries in particular will be monitoring and preparing for this change as they decide the appropriate migration strategy from their existing services. And this work has been underpinned by a very full engagement with the market to support requirements and planning for the delivery for a number of years as part of the wholesale upgrade to target infrastructure. And this slide shows how the committee and decision-making structures fit together with the ECB, and in particular, how our work is focused on the input and outcomes of the task force on the collateral management harmonization activities. So the work here in particular on the ECMS system is on target for 2023 using the ECB tracking process in SCORE. So this is a semi-annual status check from key actors in the delivery across the national stakeholder groups and infrastructures, predominantly the CSDs. And in particular, the harmonisation work in the asset servicing areas continues to evolve at pace. And this has really been a topic for us at committee level for the last couple of sessions and quarters. And one of the features here is that more efficient asset servicing will enable more collateral to be mobilised in the system, as today collateral gets pulled in and out of tri-party over record dates, and there are many inconsistencies in the notification and payment processes, and scope is being extended to consider equities, which is a much fuller kind of inventory to manage. So in recent meetings, the updated SCORE tri-party collateral management book has been endorsed, with thorough work being carried out by the tri-party collateral management expert and SWIFT validation groups, and these are substreams within the task force. And also the SCORE tri-party rulebook has been subsequently published on the ECB website, and so kind of recommended reference point there in terms of technical and procedural adjustments. And the expert group will continue to provide guidance on the implementation of the standards and considerations on upcoming items, which will prove key as the testing and landing of the product starts to mature through next year in 2023. The work has also been finalised to update the SCORE corporate actions rulebook. Here, the work of the asset servicing expert group has also been welcomed, and in particular, the remaining clarifications on payment times for issuers and agents have been added, and I'll touch on that shortly, in addition to the timing for the applying of standards to equities, which should be considered further, taking into account the earlier analysis that most processes should apply to all instruments, hence the scope adjustments. On the SCORE adaptation plans, almost all the markets encouragingly have prepared their more detailed adaptation plans, which will be published on the ECB website shortly. And finally, on the scorecard survey on implementation on SCORE standards, the results show that most markets are currently on schedule. I think currently 3 have some work to do, but some signs are very encouraging. And the participation of the survey has increased further as well, with the UK market now also participating. And the participation from the remaining markets is also being encouraged. Of note, one area we feel a little anxious about is the corresponding engagement needed with the issuer and lead manager communities to ensure a consistent approach at issuance, and the documents reflect the key elements here, in particular payment and notification activities. And we, as with the other ECB agenda items, will continue to monitor these develops closely and respond as required. Thank you.
Thanks, Nick. And one point to note here, you mentioned a lot of material throughout the update. So we'll publish the slides along with the video, which will include all the links for the documents we mentioned today. So please also have a look at that. Final question from me to you, Nick. Within the ERCC, we focused a lot over the past months on settlement efficiency. So this has really been an overarching theme that cuts right across the 4 ERCC Ops pillars and also involves the ERCC committee. We'll speak about this in more detail during the general meeting itself, but there's also an important link here to the AMISECO agenda. Can you describe our collaboration on this topic with the ECB, which has been really good, and the different groups and what the opportunity is here?
Thanks, Alex. And as you said, I mean, this has been a wonderful, step for us as a group in terms of moving the market paradigm forward in the post-trade areas. The ECB task force was actually established several years ago with a brief to look at the technical and operational performance in T2S and the associated CSDs. And in February this year, in conjunction with input from our working group, published an excellent analysis of operational performance linking in CSD and market participant flows and behaviours. This document links in directly with work we've been supporting on understanding and improving liquidity movements and operational efficiency in the system too. So a very productive interlock there. And in the annual general meeting panel session, both the live and recorded sections on this topic, we'll drill down into the issues, challenges, and solutions in front of us on this topic. But in short, the graph here shows the actual settlement levels of the asset classes. And it's worth referencing that previous key performance indicators were largely at a CSD level on technical efficiency. And the indications here are very different in terms of the published settlement rates being somewhere between 3 and 7% lower than previous technical reports, now that the operational performance is being measured. And the average settlement in the system by volume is 89% and by value 94%. So some significant opportunities there to focus the market attention in terms of uplifting those numbers. In addition, there were some very helpful analysis in terms of the drivers for fails as well, in terms of counterparty and client shorts, approximating to 30% of the fails, in addition to associated trades on hold and release. And it's likely that these are short positions still awaiting a position for inventory or funding to be released into the system. And lastly, something that we're probably more in control of operationally, sort of dynamically in terms of the late instructions and unmatched inventories, picking up the residual 20% again at an approximate level. So we feel really strongly that the key functional infrastructure developments are required to reduce the fails inventories and address a number of the underlying issues. And we've committed, both at an institutional and association level, significant resources to support these developments. From our more than anecdotal understanding, we understand that many firms have or will have by CSDR go live deployed auto partialing in ICSD flows to allow more settlement on value date, partial hold and release, in particular the custody and markets flows to match instructions earlier in the life cycle, and also adopted bilateral shaping for repo to reduce the risk of large trade fails impacting onward settlement. And finally, you're looking at backstop auto borrowing or equivalent bond borrowing programs to support efficient trade and position management on value date. And in a nutshell here, the ERCC will continue to advocate at a client and counterparty level the adoption of the above practices. And also we want to consider more thematically some of the highs and lows in market efficiency, given the stress market scenarios that we sort of touched on earlier as well. So, there's more data points to come in there, but again, we should be reflecting on stress market, standard deviation as well. And then finally, to support the ongoing and fairly frequent now industry workshops exploring the themes we're subject to fails and inventory management in particular as we move forward to February 2022.
Thanks, Nick.
And before we sign off then, a quick plug under our banner of Better Together, then there are a number of great education opportunities coming up this quarter, and these are to be found on the ICMA website under the repo resources and training links.
Really good point, Nick. Thanks for that. And we'll include those links in the slide deck as well. So please do have a look at that. With that, we come to a close for today's update. Thank you very much again, Nick, for the time, and thanks everyone for listening.